Thank you guys for attending today. I'm Tammy Schneider. I'm the Vice President of Sales and Marketing here in Texas for Brookfield. I came to Brookfield specifically to work on the Kissing Tree project, which at the time was called Paso Robles. And I had the honor and the privilege of just getting to work on every piece of this, everything you see, everything you touch, the community that we developed in order for our community members to move in here and really make it the rocking place it is with all the cool things you can do. So it's really neat to come sit on a panel and get to see new people looking here and getting to spend time with our ambassadors that get to share their experience. You get to see people from all different walks of life, and that's kind of neat, kind of cool to see. So thank you to our ambassador there. And thank you for coming to our home financing. What we really have seen here at Kissing Tree is that people are searching for different solutions when they're looking at financing and mortgage. They're looking for sometimes permanent solutions, sometimes temporary solutions. And we really wanted to have the opportunity to share some stories with you guys and some options out there, knowing that all financial solutions don't work for all people, and how you can find your advocate to work through what you're trying to accomplish, whether it's short-term or long-term, and a lot of different options. Pretty exciting. In our first panel, we really were able, I didn't quite know what people knew about mortgage and what they didn't, but what we learned was these guys have a lot of good solutions for a lot of people, and it was new information for them, so it was awesome. So one of the things that, before we meet our panel, when people want quick answers, they Google, and when they Google, I don't know if you notice, you get AI answers. Right? It used to be paid search answers, right? And I know that because I try to get Kissing Tree at the top of search, and now I get kicked off by AI. So you get an AI answer, and the AI answer is rarely a solution to your problem, right? This is just random information of things you may or may not know a whole lot about. Do we have any financing and mortgage experts in here?
I used to be licensed as
Okay, so we've got somebody. We've got somebody then. We're going to see. I bet you know a lot that you can contribute. So we are going to jump in and we're going to meet our panel. I want to introduce you guys to Chip Jenkins. He's a loan consultant with BRP Home Mortgage. Chip, tell us a little bit about yourself.
Yeah, my name is Chip Jenkins. I'm Brookfield's preferred lender out here at Kissing Tree, among other Brookfield projects that they have building in Texas. Been out here for a couple years, an opportunity for me to come out and have boots on the ground, meet buyers, prospective buyers, and just help wherever I can. I've been in the business for 23 years, been with builders for 21 years, so familiar with the process and how it works. So happy to be here.
Awesome. We also have Adam Stevens with Capstar Lending.
Yep, so I've been doing this for about 25 years. Grew up around financing, and I'm very excited to help buyers.
Yep, and these guys have worked with several of our customers here, so we're going to kind of walk through some of those journeys with you guys today, and then also talk about some different options. So why are we here today? We're here to talk about finance and mortgage, which is so exciting. If we understand what our customer is trying to achieve, we have a solution. That's a quote from our panel and your advocates. And I think what's really important and what we hope to really share with you today is that by sharing what problems you're trying to solve, or what issues you're trying to work through, or what your overall financial goals are, these guys can help. I can tell you from meeting with them, preparing for the panel and on the last panel, engaging with them early to understand your options and know the different options you might need to seek throughout your journey, and we'll talk a little bit about that. I think it's important. So the resale real estate market has experienced its fair share of fluctuations since COVID, making it challenging and exhausting to time the market. If I still own my current home but want to move forward and purchase in Kissing Tree, do I have options? Chip?
The answer is yes. From where I stand at BRP Home Mortgage, we can do what's called contingency. You're contingent upon selling your house using those proceeds to purchase here at Kissing Tree. That's one option. Another option would be to qualify for both mortgages And then once you move in and sell your departing residence, you can do what's called a recast. A recast is basically sending in a large chunk of money to redo your principal and interest payment from that large lump sum. No refinance needed. It's just recasting your current mortgage for a lower payment. That's one option.
Would you still need to put like 20% down on a conventional mortgage? Or can you start off with like lower, like 3 or 5%?
Yeah, with this being a primary residence purchase, we can do as little as 5% down. Yeah.
So you're saying you take, so if you're in your existing home and you want to sell it, say like for instance you have it up for sale, but you also want to start building on your other home, you take both those mortgages, you say, put them together?
Not combine them, just qualify you with both payments. The estimated payment here and your current payment on your current residence.
So you would take over the mortgage from the other company?
Wouldn't take it over.
You just basically say, since I can make that payment to this company, I can make the payment to this one, so therefore I'm qualified?
Yeah, if you qualify for both combined payments, yeah. If not, there's another solution that could be beneficial to you.
Yep. So Adam's got another solution for you.
So, yeah, if the borrower, if you can't qualify for both payments, and y'all are all from Texas, which is great because if you're from, your house is in Texas for as little as 0 down. So if you can't qualify for both payments or don't have the down payment, or maybe have the down payment in some kind of a taxable account you don't want to liquidate, then we have the bridge loan to where you can buy the Kissing Tree home, qualify only with what your future mortgage is going to be once your home sells, not make a down payment on the Kissing Tree home, and then when your home sells, that bridge loan will modify into your permanent conventional financing or VA financing, whichever permanent loan you like to choose. And you don't have to choose the terms of that final loan until you know exactly how much and exactly when your home is going to sell for. So it leaves a little more flexibility in the process, as a financial planning tool.
Yep, and what we've seen, I would say just post-COVID, quite honestly, because the real estate market has just been ups and downs. Sometimes it feels really good, 3 months later it feels really bad. I mean, there's not a rhyme or reason to it. Interest rates have continued to just be high, and there's not really any, I would say, real insight into when we're going to see those come down kind of at the scale and as quickly as they went up. But when the point in getting with them kind of early is that you know what your options are, because in our process you pick your lot, you pick your floor plan, you pick all of your selections, all your structural options at contract, and then you go to design. So you're in, for earnest money at the time you write your contract, and then you have a down payment when you go to the design center and design. What we've seen sometimes are people wait till the really last minute to make a decision to go talk to these guys, and they didn't know there were options all the way through. So the earlier you talk to your advocates over here, the quicker you know, should I find myself in this position? Should my lot or my property not sell? What are my options? I was saying in the last session, I've seen people walk away completely from what they decided to build here and invest in at Kissing Tree, and that's a hard thing to watch people walk away from. They walk away from it because either they're not getting what they want for their home or they haven't been able to sell it. We try to set them up with options, knowing that there's ways you can do things for short term. So that's that. You just don't want to do that. You don't want to go in and find yourself designing the perfect home and then having to walk away from it. So I would say just even if you're a cash purchaser or you are depending on selling that home, or you don't have to sell that home, but you would like to sell that home, which is probably where a lot of people that move out to Kissing Tree are, know your options, because walking away from your deposits at Kissing Tree might not be a good solution. Does that make sense when you have these kinds of solutions in there? So knowing early, I think, is important. Could you provide us with some scenarios in which you'd recommend each type of loan to the customer? So we have a fixed rate loan, which is what you guys are probably most familiar with. We have adjustable rate loans, and then we have interest only. Talk to us a little bit about why those might be good options for different customers.
So a fixed rate loan is pretty much just what it is. It's fixed, there's no adjustment to it. It's, your first payment's gonna be the same as your last payment. We've got, 10-year, 15, 20, 30-year fixed rate mortgages, and each carrying different interest rates. If you didn't want something fixed, then we have it adjustable to where the interest rate is fixed for the first 5 years or the first 7 years. Those are available options as well. Interest only don't currently carry those at this time, but I believe Adam does. And
Yeah, talk to us about those loans, fixed rate, adjustable, and interest on your side.
Well, our fixed rate, adjustable rate would be the exact same scenarios. The interest only means that you would pay interest only on the loan for usually a set period of time. 10 years is pretty typical, and those work best for people who, for some reason, are going to be foreseeing a greater income increase in the future, maybe delaying taking Social Security or accessing other retirement accounts, and want to make small payments in the meantime and larger payments down the road.
So Kissing Tree is a community specifically designed for those age 55 and older. The circumstances of these customers often differ than those of typical consumers. Could you share an example of a situation you've recently encountered with a customer inside the community?
Yeah, just recently I closed a customer here who lived out of his RV for a couple years. Unfortunately, he lost his wife, who was the bookkeeper. So he was just a skilled laborer, bringing in the money, not knowing anything about finances, until he met up with me and we walked through the entire process start to finish. He didn't have any computer skills, so everything was in person, by hand, ink signed. And we just closed him not too long ago. And no longer does he have to go back to his RV to stay, so he's got now a legitimate roof over his head.
That's awesome. Adam, what about you?
I worked with a lady who was a retiring school teacher, so not a lot of income, but she had a house with a lot of equity in it that she had bought years before. English teacher, she said, I don't like to do math. She was not going to qualify with 2 house payments and was very concerned about the timing of her move and getting her house sold. And so with the bridge loan, she was able to buy in Kissing Tree. She had a good realtor advocate who was able to have a good marketing plan for her home. Once she got out of her house, she was a single lady, didn't like the idea of listing it while she was still living there, and she had a tutoring job where she worked from home and was able to then sell after she bought in Kissing Tree and moved that way. And then I'll add one more to a typical client is somebody who does have the funds for the down payment to buy before they sell, but for tax reasons doesn't want to maybe just take distributions out of those accounts. They want to hold those money, so they want to use that 0 down loan to sell so they can transfer the equity from their current home into their Kissing Tree home as a non-taxable event, basically.
Yeah, so something we kind of talked about preparing for the panel also is that they're comfortable working with the financial advisors. Also, they're kind of a team of people. Because again, when you're buying your first home, your goals are really different than when you're buying your second, third, fourth, fifth, sixth home. And it becomes more of a financial, decision as far as what the legacy is going to be, what you want your financial assets as a whole to look like, and how you make them perform the best. So the goals just change, and you guys all know that, right? You're always planning at every stage of your life. It's a different plan. So what advice do you offer to our audience to navigate financial and mortgage decisions?
The best advice I could offer is ask questions. Everyone's scenario is unique and different. Putting together a mortgage is like a puzzle. There's different aspects of it. So the more you can open up and share with us, the better our chances of putting that puzzle together stress-free. Yeah.
I would say start early, because you don't know how things are going to play out, especially if you have a build time of 8 or 9 months. Who knows what's going to happen. And even when you're selling your house, you don't have control over the sale process or the potential sellers, and so having contingency plans is good. And the earlier you can start and having some multiple plans is best.
Yep. And these plans don't cost you anything except for some time. I mean, you don't have to put a down payment on anything. It's just knowing your choices and options so that you don't find out too late. One of the things that I talk about in real estate, and I'm a seller of a lot of property, and you're a seller potentially of a home also. We value our home different sometimes than the market does, and that's a challenge. But at the end of the day, the cold hard truth is the market values your real estate. The market values our real estate here at Kissing Tree. And so sometimes it's really hard to get people to really understand what the market assessment for your home is. It's only worth what other people will pay for it. And so sometimes we see people thinking they're going to get a whole lot more for their house than what the market ends up valuing. And like I said, it puts you in a really bad situation. So there's no cost up front to come talk to these guys a little bit early and understand what your options are. You may not have to use anything, but if you do, at least you know what those options are.
Now, are y'all available here all the time, or how do we?
Yep, they're going to give you their information.
Yeah.
Yep. So that you guys can set some different times up. And like I said, if you have a financial plan or anything like that, you can include them in the conversation. We also see with our active adult customers, a lot of adult children who come into the conversation also. So we're used to kind of talking to all of them.
What are the things that affect interest rates from our perspective? I know the FICO scores and things like that, but I guess the real question is the amount of money you put down help on the interest rates that you're going to receive?
Yeah. In addition to credit score, the down payment does affect the interest rate. The loan program affects the interest rate. Yeah, and really the timing of when to actually lock the rate. Yeah.
So is there a time frame you can lock a rate for? So in other words, if you lock a rate and it's 6 months to your house gets finished, does it stay locked for 6 months, or is there like a 90-day window that you have to work?
Yeah, great question. We've got a long-term lock option to where you can lock the rate for 6 to 9 months. There is an upfront deposit required to do that. If you didn't want to go that route, then we just kind of float with the market until about the 45 to 60-day range before your house is done to do a standard rate lock then, at no cost.
Okay.
Yeah.
That's something we'd work with you or
Correct.
your team with you.
Mm-hmm.
Yep. Anybody think interest rates are going to go down a lot in the next 12 months?
No.
I think the Fed is gonna have a big struggle. I think we're gonna see stagflation, so they're gonna struggle trying to control inflation, which is gonna be driven by tariffs, but we also got a lot of job loss too, so.
Yeah.
I think they might switch gears and focus more towards getting more women.
Yeah. It'll be interesting. I mean, if that happens, theoretically, interest rates would go down. Interest rates going down a whole lot isn't a sign of a good thing. You know what I'm saying? So seeing them.
And of course, they're on the short-term rates. They've had problems with bringing the long-term rates down
Yep.
because we have such a big debt hangover.
Yeah, I was at an industry event last week when we were lucky enough to get some economic forecasts, and they're really saying, and like I said, nobody's really been incredibly right, but it's people who, they work through all the data and the analytics, and if anybody is going to have a justification for what might happen, they're saying over the next 12 months, maybe 5.5 to 6.5, somewhere in there. I think the big driver obviously would be the Fed making a big decision, but there's other things inside that can affect it. We've seen it come down over the last couple of weeks or month, and those are other things that aren't affected by what the Fed has to say. So I think that brings up a good question on our end. There's buy down options. There's also refinancing options. Tell us about the costs associated with refinancing.
So with refinancing with us, there's the only cost is through the third-party title company that's used to conduct the refinance. We don't charge any lender fees per se. So if you're looking for just a new rate, possibly a new term on the mortgage, all the costs associated with refi can be absorbed into the new loan amount. So it's nothing out of pocket for you on a refinance.
Yeah, and our title company was here in the last panel, and they talked about they give a discount if you use them as a title company once you've purchased in Kissing Tree. you use them again, there's some kind of a discount. Not familiar with what the number is, but just so you know, as you kind of walk through what your options are, we can also set you up to meet with court or title, which can walk you a little bit through what those costs associated and what the discount might be. What other questions do y'all have?
Are you, I don't know the correct term, so if I say it wrong term, please don't be offended. Are y'all like a mortgage broker, that y'all do the mortgage rate and then the note will actually be with another type of company that's behind that you work with from that standpoint, or are you the actual company we would have the mortgage with and make the payments to?
So BRP Home Mortgage is a branch off of Loan Depot. Have you heard of Loan Depot?
Yes.
So Loan
Used to
Depot,
do all their printing.
huh?
Used to do all their printing.
Is that right? Okay. So Loan Depot is the one who initially closes your loan here at Kissing Tree going through BRP Home Mortgage. They keep and service about 20 to 25% of their loans, and you'll pay Loan Depot directly every month. They do sell off loans to other servicers, so your loan may get sold to Mr. Cooper or Lakeview or whomever, but you will remain in our system to where if you come back for a refinance, the process is streamlined to where you're already in our system. We can start on the refi,
So you'd be the gateway into the system?
Correct.
Okay.
Right.
Adam, what about you?
Yeah, so on the bridge loan, it's a little bit different of a process. So the bridge loan is a portfolio bank product, so we do service that, and I'm kind of the primary contact for that through the bridge loan process, which is only several months. There is a 6-month time frame to sell the house. The typical time frame is more like 2 to 3 months, and then once your house sells, then the loan modifies into a conventional mortgage or a VA mortgage of whatever your loan program you choose, and then it's the same. But most of those loans are sold to one of the larger loan servicers, like a Mr. Cooper or Wells Fargo or Chase or somebody like that.
Okay.
No question, a little bit out there. So, I'm not gonna go into this, probably like a couple of years, I'm still waiting for my son as a sophomore to graduate from high school. And one of the things that I'm excited about for the future in terms of banking developments and everything, so the SEC just wrote SAB 121, which prohibited banks from custodying Bitcoin. And so now I'm hearing all this talk about maybe some Bitcoin-backed mortgages coming down the pike. I know it's not gonna happen overnight, but have y'all heard anything about that from inside your respective companies?
I know it's risky, but I haven't seen or heard anything about the possibility of that being released. That's just, it seems to be a ways down the line. Yeah.
It's actually usually a pretty little LTV, so it's not
Mm-hmm.
too bad, but the thought would be so I could, wouldn't have to recognize capital gains of selling it, just use that for my down payment and then the house back the rest of it.
Yeah. We're
Very
an
creative
FDIC
financing.
regulated institution, so
What's that?
we're FDIC regulated, so whatever they do is what we'll do.
Yeah, it's all opening up now, changing administration, so,
Yeah, that's going to be interesting.
yeah, very exciting, so.
Yeah, choices and options with that. Yeah. Yes.
So let's do a cash purchase and you need a bridge loan.
Right?
And, up to 6 months or whatever it is. You get it done in 2 months, you just walk in, pay the cash, and pay the interest over 2 months and we're done. Right?
That's exactly it. And that's a fairly common scenario. And so, I have folks that'll qualify for the bridge loan and their house is listed for sale. And we never close on the bridge loan because the house sells before it's time before the Kissing Tree house is completed or the timing works out. Or, like you say, the loan is interest only on the amount borrowed. And so, like you say, 2 months out, you sell the house, you pay the whole thing off, there's no prepayment penalty, and you go on down the road.
So are you seeing more people like pay cash or learning or doing a mortgage at, age of 60 something? What do you see? Like if you can pay, like if you're taking money, you sell like the bridge loan thing, so you do that and you sell your house. But you sell your house you still have more to owe, right? So are you saying if you are moving up, it's smaller?
I wouldn't say there's a trend because everyone's story is different.
Yeah.
I had some clients last year they sold their house and they had 2 kids in college. And so they're like, we want a mortgage because we're going to use the proceeds from the sale of our house for college tuition and moving expenses and everything else that we don't have, because we don't want to we had money set aside in mutual funds that did very well, but we don't want to liquidate those and pay taxes on them. So it's
Right.
purely a financial planning situation.
Yeah.
It's different from it for everybody else.
Well, I thought having a house payment though,
Well, yeah, and then there's plenty of folks who are at the stage in their life where they don't want a house payment, and so, but it's a financial planning tool. It's
Yeah.
just one more tool in the toolbox of how you look at it, and that's where, consulting with a financial advisor in your situation
yeah, because
can,
I'm that retired school employee that cash flow doesn't come in a whole lot during the
right.
month, but
You
the
want
investments-
to have that fixed.
Yeah.
I understand.
Yeah, I don't wanna depend on my pension that's coming in.
A lot of customers take out small loans here just for the tax implications, to write off the interest. That's an avenue to go down as well. It keeps the payment relatively low. But yeah, that's another option that customers do here. Mhm.
I have one for you, Tammy, a little bit.
Oh, goodness.
Off topic, but I think you're probably a great person to talk to. So, I love everything about Kissing Tree. One thing I would love to see, we're looking at homes inside and outside. And outside, I'm a car guy and everything. So we're looking at ideal would be like a 4 to 5 car garage. It would be wonderful. And the thing about those things is like, we're gonna be downsizing, empty nesters. So we don't need a humongous house that usually goes to that. So it'd be
Yeah.
awesome if you could like.
To have one option on that 70-foot lot, that was a 4-car garage and an 1,800 square foot house and 1 bedroom and a
Even
kitchen.
if it was, even if it was just a regular 2-door, but tandem both ways,
Yeah,
have that flexibility and everything.
yeah, that's something to think about.
And having to pay for it, because I don't need a huge house,
Yep.
but.
Well, that's a good
I
point.
don't have to get rid of my toys.
It's a good point, though. We make the assumption if you want a bigger lot, you want a bigger house. And maybe we've made the wrong calculation there. Maybe you just want more room for your
More
toys.
time to play with different toys.
I love it.
Maybe a car barn at the community center.
Yeah, you know what? That's gonna have me thinking. We don't have that today, but I'm gonna walk away and I think that's a real, that's a serious comment. I'm joking about it, but I think it's a real thing.
Whatever.
But then what's gonna happen, people are gonna calculate it cost per square foot,
But your square foot's not included.
but the lot is, our 70-foot lots are typically the more expensive.
Yeah.
They're more well located.
Yeah.
But
I know a lot of
as
people
long as
like-
you won't calculate that on me, I might look
A
at
lot of
that.
people like me would be willing to pay for it.
Yeah, but I think it's a valid point because you don't want a bigger house, but you do have things you've collected or hobbies that you have.
Yes.
Yeah, we're gonna think about that. It's a good suggestion. You had a question back there.
Yeah, the bridge loan, just so I can finish everything. So, we're in a house, we're gonna sell our house, we're gonna take the rest of our house, and we're gonna roll into the Kissing Tree house, but we're stepping out in terms of cost. So is the bridge, it's been part of what you said, the bridge loan limited to what you expect the equity in your house to be if you're selling, or could it be more than that?
So you qualify based on the equity that you have in your house.
Okay,
And then in terms of, so there's a 2-part calculation. You have to have equity in your house, but then for the income qualifier, we make sure that after you close, you can qualify on the final loan on the Kissing Tree home. So we don't qualify you with both houses at the same time, but we want to make sure when that sale happens that you've got a landing spot. And for some people, that landing spot is having no mortgage. If you own a large enough house free and clear, then there is no qualifying other than
right.
getting an appraisal on that departure residence.
So, I'm gonna piggyback on your question.
Yeah.
So, if, say this house sells, so that they're gonna use my pension numbers for me qualifying, for a house here, to qualify, and I own my house in San Antonio outright.
Right.
So, would they take that in that my mortgage would be
Yes.
almost 200,000 versus
Yes.
400 something thousand?
Yes.
Okay.
Yeah, we qualify you based on the expectation of your,
Expected,
of the final mortgage.
okay.
So the purpose of the bridge loan then would be to sort of give you the warm fuzzy kind of safety net if you're not sure your house is gonna sell, you don't wanna cut the price.
Yeah, I call it insurance.
I understand, yeah.
Yeah, and like Tammy said earlier, it doesn't cost anything because I talk to a lot of folks and qualify them for the bridge loan and they wind up never using it.
Yeah. Yeah, and kind of a couple of the examples, and I sit on the unfortunate side of somebody sometimes wanting to walk away from a house they've designed and they've put a lot of earnest money. I mean, we've seen people walk away from $110,000, $120,000 here. It breaks my heart for a lot of reasons. I mean, one, that's a lot of money to walk away from. Two, they put a lot of time and dreams inside the building and designing that house the specific way, a lot they fell in love with. And sometimes I see people make that decision pretty abruptly without really understanding all the options that they have. And I think choices and options are good. They're not always ideal or exactly what you want, but I would always tell people to think about them before you walk away. I would advise my parents the same way. Don't make those decisions so abruptly, because we've also had people lose the money and then come back. And a lot of times what we try to do is we try to put in there, we'll apply a portion of this to another purchase in a year. But I mean, that's not, they're coming back and they're picking a lot that they didn't pick, it's just not a good situation. And had they really planned out what happened if they didn't sell that home, I hate, and not because I work for Brookfield, I don't want anybody to have to make a decision that they can't move forward at Kissing Tree because they weren't prepared if their house didn't sell. That doesn't feel good because, I mean, they put a lot of time and effort into building their house here and they got excited, they probably made some friends and stuff like that, and that's really what the community is about. So I would encourage everybody to understand those options. Even I used to run a brokerage, and same thing, just understand your options. It doesn't mean they're good and it doesn't mean you want to use them, but knowing those options, if you need to, is always good. And then give yourself a little bit of time to be able to think things through so you're not stuck having to make a highly charged decision either around money or emotion. So one of the little things that I put here, dream big and remember that the right mortgage can help make those dreams a reality. The possibilities are there. It's all about finding the right fit for you in your next life's chapter. And that's so important at this age because, like I said, people do financial things for different reasons. Every single person in here has a different financial setup. We've got somebody selling a ranch and moving from the country in there, and you've got farms and all these other things in different places. You've got people who have kids still in high school. I mean, you have all these different, somebody who's coming from the education system. It's all different, and everybody has saved their money differently, invested their money differently, and so really understanding that and how mortgage and lending can help you through that, it's really important. So talk to these guys, connect with your financial advisor early. Hopefully that's the biggest thing that you guys get in here is make those decisions early so you don't find yourself in a tough situation. Anything else? Any other questions? These guys are going to be around, so if you want to grab their cards, meet with them, talk with them, if you have a specific scenario you want to discuss, they're your guys. Otherwise, thank you guys. We appreciate it.
Thank you.
Thank you.
Yeah.